that this is about volatility. This is about, people talk about fundamentals. This isn't about fundamentals at this point. This is about things kind of breaking and decoupling. This is about a reversal, an unwinding of leverage, and it's playing out in volatility because everybody's sort of on one side of the boat, and the carry trade is certainly, the yen carry trade has been a big part of that. While I think there's opportunity, you have to kind of think of, well, what am I here? Am I an investor? Yeah, okay. I think the S&P is going to 6,000 at some point again. Am I a trader? Well, let's be very careful here when we talk about fundamentals. I think that can inform you to some extent, but just understand that things are in a panic. It's kind of like GME going from 12 to 65, almost what the VIX just did. It's not rooted in fundamentals. It's rooted in structural issues.
This short clip is presented by Club. Club provides access to Samantha LaDuc and her team of professional macro and micro traders, analysts, and educators. Club is ideal for active traders, investors, and institutions who want Samantha's best-of-breed market timing calls across all asset classes and timeframes like chase, swing, and trend. Get the trade before it happens. Sign up to Club now and get full access to daily live trading room with Samantha LaDuc, Slack trading desk with detailed analysis and trades, custom trade support when you need it, and much more. For more information, visit www.LaDucTrading.com/club.
Gamma squeezes, short vol squeezes, dealer gamma being a problem here, right? So if we look at dealer gamma, there's an imbalance right now. We're back to short gamma. So this is the way I showed you a couple charts here. Estimated S&P 500 dealer gamma. So under 5,200, we have all this short gamma. And so just a quick little lesson, because I want to be able to talk in this language, folks. This is kind of how it works. If you're long 100 calls, you're a dealer, you need to go delta neutral. So think of dealers as always having to manage their risk. They're going delta neutral. If they have risk on the sheet, if they're long deltas, and if their portfolio looks long, they have to de-risk and return that to a neutral position most of the time. I mean, you're trying to make money and lean a little bit here and there, especially when you get offside and you're negative gamma. You have to lean a little bit because things are getting worse for you as markets move around. But effectively, if you're long 100 calls, you're short 5,000 shares. So this is when you're on the positive side of gamma. Market goes up, your delta increases, you have more shares to sell. Market goes down, your delta goes down to 30, let's say, from 50. Now you have stock to buy. So when you're a dealer and you're long gamma, that's supportive of markets. When the market goes down, you're able to support markets by buying futures, by buying equities, and supporting the liquidity that's coming in from the sell side. When you're short, it's the complete opposite of that. So if you're short 100 calls and you're long 5,000 shares to hedge that's neutral. You're neutral right now at this given moment. But when the market drops and your calls go down to a 30, now you're overhedged, right? So this is what dealers are facing when they're short gamma. And this is part of what's happening out here is I know that was kind of quick, but know that when dealer gamma is very negative, you're in this, and that's where we are right in here. Dealers, and this is on top of levered ETFs that need to rebalance at the end of the day. They need to sell futures or underlying. And then on the way up, they need to buy. So that exacerbates moves. Let's think of it that way. When you're short gamma, you're pushing the elastic, stretching the elastic out. So right now we're in a short dealer position, and that's what makes us a little bit vulnerable to the 5,000 level and right down around here, which was our kind of starting point in April. So when the S&P kind of bottomed there, that's maybe our ultimate target. We could be wrong. We could get going. And again, remember, is this your kid's account? It's okay to kind of start dipping in and adding to that. Is it your trading account? Be careful. There's some very durable fear out there that needs to unwind. We could see that every day. The VIX futures are kind of hanging in there. Even though the VIX comes down, the VIX futures are hanging in there. And so when the dealers are short gamma, they're chasing on the way down and they're chasing on the way up. So if we can get the S&P somehow up into the 5350 towards 5400, we might actually see that snowball into panic buying again. So this is the world we're in right now, right? It's lots of volatility down here because everyone's confused and there's something going on. something's broken. You've got these guys like Jeremy Siegel, this perma bear. The market's down 8 or 9 or 10%. And he's like, please help us, cut rates. I mean, this is kind of insane. Now, there is some truth to the wealth effect. So if we unwind the wealth effect, then that is going to ultimately hurt the economy a little bit, which has really been bolstered by high home equity, stock prices going up, and pretty good employment. Still pretty good employment until maybe recent numbers. But one employment number does not make a big trend here. I don't think we're heading towards any kind of hard landing at all. You got the perma bulls coming out and screaming for 50, 75 basis point cuts. This sell-off is not about the economy. This is about something structural going on out there. And that's kind of exciting because it's creating opportunity for us, but it also means we have to be very, very careful.
Subscribe to LaDuc Trading YouTube channel for more live trading room recap videos and other content.